Hello everyone, I'm Chris Holt with FM Lending Services in Durham, North Carolina, here to talk to you today about mortgage loan options for first-time homebuyers. First off, I would like to talk about credit, what you need to do to ensure that you have the best credit score possible. As you probably already know, your credit score will directly affect not only the types of loan programs that you qualify for, but the interest rates on those loan programs. So it's important before you even sit down with a mortgage lender to make sure that you've done everything you can to position yourself in the best possible place to get the best possible credit score. The first aspect of generating a good credit score is having a good payment history on your open accounts. Obviously, if you pay your bills on time, your credit score is going to be as high as possible. In regards to making sure that you have an excellent payment history, you may want to consider if you have any credit cards that you don't use very often, that you've held open for a long time, you may want to consider charging something small once every 6 months or so and paying it off immediately, just so that they continue to report a payment history to the credit bureau. One of the other items that affects your credit score is the average age of your credit accounts. Therefore, if you have any old accounts that you've been considering closing, maybe a store card that you've had for 10 years that you don't use anymore, I would strongly suggest keeping that account open, as it's helping to extend the average age of your open credit accounts. Another factor that's very important is your debt to credit ratio. This is in regards to your revolving credit like credit cards. This also will affect lines of credit with your bank account if they report to the credit bureau. If you have a line of credit against your checking account, they may report whether you're borrowing any money on it and what your payment history has been with those types of accounts. It's very important to try to keep the amount of credit you're borrowing low in relation to the total overall credit that's being extended to you. I recommend not charging more than 50% of the available credit limit. So if you had a credit card with a $1,000 credit limit, try not to charge more than $500 at any one time. If you are looking at applying for a mortgage loan and you have a couple of credit cards that you're currently owe more than half of the available credit limit, you may want to try to pay down the balance prior to applying for the mortgage loan. Another factor that plays into your credit score is any new credit reporting to the credit bureau. That will include inquiries as well as payment histories on any brand new accounts that you have. In regards to inquiries, the credit bureaus do not penalize you for shopping for a mortgage loan or other type of credit. So if you have multiple inquiries for the same type of product within a 14-day window, it's not going to count against you more than once. It's going to count as one inquiry. A great place to start with getting prepared from a credit standpoint is by pulling a copy of your own credit report, which does not count as an inquiry against your credit report. You can do this for free once per year with each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, through a centralized website, which is www.annualcreditreport.com. On that website, you're eligible once per year to get a free copy of your credit report. You can also dispute any incorrect information, such as incorrect address history, accounts that you don't have, basically any information that reports to the credit bureau that's incorrect. You can dispute online directly through that website, which is a free service from the credit bureaus. I would strongly recommend pulling a copy of your credit report before you ever speak to a mortgage lender to make sure that all the information is correct. Keep in mind that if you dispute an item on your credit report, it will typically take at least 30 days for that dispute to be resolved, and you'll be notified by mail once it is. A few other tips for things that you should and should not do as you get ready to start the home buying process. 1, don't open any new credit, as it may shorten the average age of your open credit accounts. 2, don't close any open credit that you currently have, as again it may shorten the average age of your open credit accounts. 3, try to pay down the balances on your revolving credit so that you owe 50% or less of the available credit. And 4, whatever you do, make sure the payment history on all of your open accounts is current. That should about wrap up what you need to do to get your credit score in the best possible position. I would recommend, even if you're not looking at purchasing for another 6 months or so, after you have reviewed your own credit report, review your credit report with a mortgage consultant so that you can get their feedback as well in regards to any other items that may need to be addressed. I want to talk for a minute about loan programs that are currently available for first-time home buyers looking to purchase a home in North Carolina. And keep in mind that we are in a mortgage environment right now where loan products and terms are changing on a weekly or even daily basis, so I would strongly recommend doing a full loan pre-approval with a mortgage consultant as you get ready to start this process to make sure that you're still going to meet guidelines. If you've been pre-approved for a mortgage loan 3 or 6 months ago, the pre-approval standards could very well have changed between then and now, so I would recommend getting your pre-approval updated before writing an offer on a home. In regards to the types of mortgage loans that are available right now, you're looking at a few basic types. One is a standard conventional loan. This is the type of loan you can get at pretty much any bank. Conventional mortgage loans typically offer the best terms when you're putting down 10% or more on a purchase. That type of a down payment is not available for most first-time home buyers, so we're going to want to look at some other loan products as well. A great product that a lot of first-time home buyers are using right now is FHA, which is Federal Housing Administration. That is a loan that's insured by the Federal Housing Administration and offers some great terms. It does currently require 3.5% as of January 1st, 2009. The down payment can come as gift funds from a family member or can come from your own funds. Borrowed funds cannot be used towards down payment on an FHA loan. Another great loan that's currently being used by first-time home buyers looking at rural properties is USDA. That's U.S. Department of Agriculture's Rural Housing Loan. That will offer up to 100% financing on qualifying properties. You'll want to talk to a mortgage consultant to make sure that any property you look at falls within the guidelines for USDA loans. There are also limits with USDA loans on how much income the household can make annually to still qualify for that loan product. If you've ever served in the military or currently active duty, you may be eligible for VA financing, that's Veterans Administration financing. They also offer great terms for up to 100% financing with no mortgage insurance. VA is a great loan product, so if you are eligible for VA, I would strongly suggest looking at that as a financing option. Finally, the state of North Carolina offers a first-time home buyer program through the North Carolina Housing Finance Agency. There are a number of great products available through the North Carolina Housing Finance Agency, and you can get more information on those products by visiting www.nchfa.com. The federal government is currently offering a tax credit for first-time home buyers purchasing a home, so please take the time to view the web address that's listed below, get some of the questions answered on that tax credit, and see if it's something that's going to make sense for you. There are 3 different categories of out-of-pocket expenses that you may incur when you purchase your first home. The first of which is whether or not you make a down payment on your mortgage loan. That will be based on whether or not you have a down payment available, as well as the types of loans that you qualify for. You will also want to consider that you will have closing costs on your mortgage loan, as well as for other services involved in purchasing the home, such as your attorney's fees, the cost for title insurance, getting the home appraised, as well as some other fees for things like your county recording fees. In addition to closing costs, there's also the cost to set up your escrow account for taxes and insurance. With your escrow account, you will be paying your first year's homeowner's insurance premium at closing, in addition to setting aside a small reserve for both taxes and insurance to make sure that your account is fully funded in order to pay those bills when they come due next year. It is quite common for first-time homebuyers to negotiate for the seller to pay closing costs and/or escrow costs when they're creating the contract. You will want to discuss what you're asking for with your mortgage consultant, as many loans do have limits on how much the seller can contribute towards closing costs and escrow costs. Here at FM Lending, our whole goal is to make sure that the whole home purchase transaction goes as smoothly as possible for you. Our loan packages arrive at attorney's office on average about 6 days ahead of closing. We make sure that you don't have any last-minute surprises that come up to create any unnecessary headache. We offer an easy online loan application system to get the ball rolling with our free pre-approval process. You can visit www.fmlending.com/Durham to apply online at any time. FM Lending is a full-service mortgage banker. What that means to you is that we underwrite and fund each loan in-house in our Raleigh location. We have control over the loan approval process from start to finish. Working as a mortgage banker allows us to underwrite and fund loans on behalf of a number of different banks. We currently underwrite for about a dozen banks, both local and national, so we have a great cross-section of loan products that are available on a national level, as well as the benefit of being able to obtain the best possible pricing on any given day. Thank you for your time. I hope you found this helpful. If you have any further questions or would like to get a free pre-approval, please contact me either via my phone number, email, or on my website, www.fmlending.com.